Kia ora, kia ora. Good morning. It is Friday. It is the end of July, and it is the day that the US officially entered a recession. I mean, technically it was the 30th of July in America, so yesterday, but it's today here. It's today. Wherever you are, it's today. Yeah. At any rate, or date, yeah, I am Micro Markets. This is Kiwibank. Markets in a minute. So yeah, the United States, they are in a recession. The deepest recession since apparently at least the 1940s. Yeah, I'm quoting a Bloomberg Newswire there. I can't actually confirm it myself, because despite all this pretty stuff behind me, I don't have data going back that far. Yeah, 1947 is where I run out of steam. Methodologies change. It doesn't matter. What matters is the US economy shrank by 32.9% during the second quarter of 2020, and that follows a 5% decline in the first quarter. Yeah, 2 consecutive quarters of negative growth. Boom. Technical recession. On the plus side, the 32.9% fall was less than the forecast, 34.5%. But that plus was minused off by higher than expected weekly jobless claims data, continuing claims data, and upward, so worse, revisions to previous weekly jobless claim data numbers. Yeah, on top of all that, President Trump tweeted a question maybe, regarding delaying the election until it's safer to hold one. Yeah, politics, not really our bag, but this particular political tweet, it splashed a little bit of petrol onto an already raging market volatility fire, so we're going to count it. Yeah, market reactions to all of that stuff. What did I say? Raging volatility fire? Might be a bit emotive, a bit sensationalist, but basically it was that. Yeah, equity markets mixed. European indices down 2 to 3% across the board. US indices very choppy, somewhat recovering. The Nasdaq's actually currently mildly positive. Gold is lower, oil is lower, 2% here, 1% there. Sovereign debt, mostly higher, risk-off kind of styles. US dollar choppy, but lower. New Zealand dollar, very choppy and ultimately higher. Yeah, we've traded a more than 50-point range overnight. We went home and left the bird 5 p.m. yesterday at a smidge below 66.5. It fell to 66.2 in the early evening. Is now trading around 66.7, just above there. Volatile. The Kiwi also semi-broke with its recent trend of underperforming relative to its major currency peers. It outpaced the Aussie. Kiwi Aussie back near the 93-cent mark. It kept pace with the yen, so holding there 70 yen. And it was outpaced, again, by the euro and the pound. So we're in the lower 56s against the euro, and right now we're scratching below the 51 pence mark. Yeah, lowest Kiwi pound level since start of June. We stayed June? Early June. Looking ahead, we have Chinese manufacturing data today and a whole heap of Eurozone and US economic releases tonight. Matt, he will have all the biggies detailed in first-hand tables, if you're keen for, cues on what to stay up late for. Okay, that is it. Have a great weekend. Have a happy start of August tomorrow. Pinch the punch, blah, blah, blah. Ka kite anō.